Good evening, everyone from Bangkok, and welcome to the webinar on the U.S. government resources related to energy sector development. My name is Mark Dunn, and I'm the program manager for the USAID Southeast Asia EDGE Hub activity that's being implemented by Tetra Tech. Thank you for joining us today, be it your morning, your afternoon, or your evening. We've got a great session lined up for you, and we hope it will be informative and give you the chance to interact with the distinguished group of panelists that we've assembled here today. Before we begin, I'd like to ask you all, if you haven't already, to take the short poll that should be visible on the right-hand side of your screen. That will help us just get a baseline data for who the attendees are and their baseline of knowledge. But we've got a lot of ground to cover tonight, so I'll turn the microphone over to Jane Summers, who's a senior energy advisor with the Energy Bureau of the U.S. Agency for International Development, who's based out of Washington, D.C. Jane will provide some remarks and a bit of a scene setter. I'll rejoin you a little bit later in the event to help direct the question and answer session, but without further ado, here's Jane. Jane?
Good morning, good afternoon, and good evening to those participating from around the world. We thank you for joining us virtually to take part in this discussion on U.S. government resources available to support energy sector development. I'm joined today by colleagues from 6 different U.S. agencies who will discuss how each of their agendas support this development across Asia. In July of 2018, the United States government launched the Asia Enhancing Development and Growth Through Energy, or Asia EDGE initiative. It is a government-wide initiative to grow sustainable and secure energy markets throughout the Indo-Pacific region. Asia EDGE draws on the expertise and resources of the U.S. government, private sector, and international finance institutions and works to address 3 fundamental challenges to energy security in the Indo-Pacific region: energy demand, energy poverty, and energy markets. The expected increase in energy demand across Asia and the investments needed for infrastructure to support that demand are massive. Access to reliable, modern energy services is critical to support and promote economic growth and stability for the 700 million citizens of the Indo-Pacific region that lack access to energy. Open, efficient, and rules-based energy markets are the most effective way for countries to determine their own energy futures. Asia EDGE and the U.S. government agencies that support it provides technical assistance to meet these challenges. Asia EDGE ultimately works to strengthen energy security, increase energy diversification and trade, and expand energy access. Throughout this panel, you will hear how the U.S. government can help advance the priorities of Asia EDGE and the priorities of our partner countries. Each panelist will provide initial remarks about their agency before we move to a question and answer session. If you have questions for the panelists, I encourage you to use the Q&A feature of this webinar to submit them. We will try to address as many of the questions as possible. I would now like to turn the microphone over to Amanda Vanden Doel, representing the U.S. Agency for International Development, to provide some remarks. Amanda?
Hello, everyone. Good night, good evening, good morning to everyone out there. And thank you, Jane. My name is Amanda Vanden Doel, and I'm the Energy and Infrastructure Team Lead at the USAID's Regional Development Mission for Asia, based in Bangkok, Thailand. It's a pleasure to join all of you here tonight and this morning from other government agencies, as well as with all of you from Asia and around the world. I want to first start by giving you a bit of background on USAID's activities in Asia, particularly as it relates to the energy sector and to the Asia EDGE initiative that Jane just introduced. USAID supporting a whole of government initiative through its role as the International Development Agency for the United States government. We're specifically helping to accelerate the growth of the region's energy sector by promoting utility modernization, increasing deployment of advanced energy systems, supporting transparent best value procurement, fostering regional energy, trade, and integration, and attracting private investment. Through this work, USAID is supporting the Indo-Pacific region's transition to self-reliance and resilience. USAID has extensive experience partnering on energy issues in the region. We offer technical expertise and we act as a convener to help build sustainable energy markets. And through Asia Edge, we aim to unlock billions of dollars of investments to increase energy security in the region. As Craig Hart from USAID's mission in Vietnam noted at the opening plenary on Tuesday, if you were able to tune in, USAID has partnerships throughout Asia, from supporting clean energy development activities in Indonesia, Vietnam, and across Southeast Asia, to advancing cross-border electricity, trade, and regional energy market development in South Asia. We're accelerating the growth of the Indo-Pacific markets. I know many of you watching today represent the private sector, both in the United States and across Asia, and we're interested in partnering with you, learning from you, and working with you. Private sector engagement is a cross-cutting theme in all USAID activities, and particularly in the work that we're doing here on Asia Edge. We consult, we strategize, and we collaborate with private sector companies to improve the scale, the sustainability, and the effectiveness of our programs. Working directly with local and international companies, USAID assists private sector partners to overcome barriers to investments, and we provide technical assistance in the form of financial advisory support, tools, guidelines, and training. I want to highlight some of the work that we're doing in the region and the results that we're seeing from these efforts. First, in the Philippines, where this conference usually takes place, our Clean Power Asia team is partnering with the Philippines Department of Energy to improve policies governing pricing and access to rooftop solar to help lower electricity costs. The policy changes are expected to drive an increase in solar energy deployment by nearly 370 megawatts through 2030. They'll also help create more than 1,400 green construction and installation jobs. Through our Vietnam Low Emission Energy Program, or VLEAP, we worked with the Clean Energy Investment Accelerator to establish the Vietnam Renewable Energy Buyers Alliance. This alliance brings together large commercial and industrial users to demonstrate innovative renewable energy purchasing models and to strengthen the policy frameworks that are needed. It helps to demonstrate also to the government of Vietnam the desire of foreign investors to access renewable energy for the Vietnam market. In response to the ongoing pandemic, USAID, through its partnership with the National Renewable Energy Lab, or NREL, released a report that presents an early assessment of the COVID-19 impacts on the power sectors of countries in Southeast Asia. It also identifies opportunities to build power sector resilience as these countries respond and recover from these impacts. The report was just released yesterday, and those that attended yesterday's session maybe were able to learn a little bit more about that report. We'll provide a link to that, and you'll be able to download that report at the end of this session tonight. In South Asia, USAID implements the South Asia Regional Initiative for Energy Integration activity. This program aims to develop a competitive regional power market and assist with policy changes that will advance power trade in the region. Power trade increased from 1,400 megawatts to 2,500 megawatts under the current phase of the program. USAID has many more activities ongoing and lined up, and I look forward to sharing more with you later in the session and addressing questions that you may have. Thank you very much.
Thank you, Amanda, for those informative comments. Our next speaker is Catherine Clark, a senior energy advisor at the U.S. Department of State in Washington, D.C. Katie?
Hi, everyone. Good morning, good evening. As Amanda said, thank you very much, Jane. I'm really excited to be here with my interagency colleagues on this panel and talking to the audience. As Jane mentioned, I'm a senior clean energy advisor at the Department of State. I work in our Bureau of Energy Resources. Department of State is like our foreign ministry. And I also coordinate Asia Edge, both with the interagency and also at Department of State. So Security of the Indo-Pacific is a priority for the US government. According to the International Energy Agency 2019 projections, by 2040, Southeast Asia's energy demand is supposed to grow by 60% and require trillions of dollars in investment. I think Jane alluded to this in her opening remarks. How countries meet that demand will have a significant impact on energy security and economic stability. And as Jane mentioned, Asia Edge draws on the expertise and resources of the US government, partner governments, private sector, and international financial institutions to address this challenge. The initiative builds on decades of robust US government policy and programmatic work in the Indo-Pacific and recognizes that enhanced coordination will accelerate US government engagement and ultimately benefit the United States and the region on the whole. With much of our current engagement being done virtually due to COVID, these long-established relationships are more important now than ever. With a robust network of officials at approximately 30 embassies across the Indo-Pacific and subject matter experts in DC, the Department of State is able to work with partner governments and industry to identify tailored areas of engagement and convene the interagency partners. One of the ways we engage is diplomatically, from technical experts to senior level officials. For example, through yearly government-to-government energy security dialogues with countries including Vietnam, South Korea, Japan, and Australia, we discuss issues of power market reform, energy efficiency, and renewable energy integration. In addition, ENR works with our partner agencies and governments on a range of technical assistance programs to provide targeted and diversified approach to these issues. Our programs are based on a country's priorities, including energy efficiency, power and gas market development and reform, renewable energy integration, storage, finance, and digitalization. It's pretty exhaustive. So just a couple examples of our work. In India, ENR is partnering with the Federal Electricity Regulatory Commission, FERC, and Indian national and state officials, as well as power sector stakeholders, to promote cost-effective strategies to ensure India's power system has adequate flexibility to support its renewable energy ambitions. Through this flexible resource initiative, which was launched under the U.S. Clean Energy Finance Task Force last October, we aim to strengthen India's ability to raise private capital to finance its energy security needs by scaling its clean energy sector while enhancing opportunities for U.S. companies in the power system. Another way we're looking at diversified energy approach is by addressing the rising demand through particularly energy efficiency in air conditioning. Air conditioning comprises about 30% of peak electricity demand, so it's pretty important for a region that is growing by 60% by 2040. We are working with all 10 countries in ASEAN. We have developed some voluntary guidelines for best practices for policy implementation to get increased efficiency on air conditioning. ENR also has a power sector program that is focusing on Vietnam and Thailand. Those are priority countries as they are restructuring their markets, and we have ongoing partnerships with both the regulators and electric utilities. And finally, one of the final examples is energy storage. We're working with the National Renewable Energy Lab in South Asia to model the value of energy storage to the grids and also present policy recommendations on how market structures can evolve to include storage. So in closing, I just want to say first thank you to my USAID colleagues for putting on this fabulous session. Looking forward to the discussion and just seeing our Asia Edge community adapt quickly with creative solutions to the challenges of COVID over the past few months has really bolstered my confidence that we will be able to work together to address the energy needs of the region in a sustainable fashion and enhance our collective security. So thank you.
Thank you for those insightful remarks, Katie. I'd now like to introduce Victoria Gunderson, the Deputy Director of the Office of Investment, Energy, and Infrastructure at the Department of Treasury, who is also joining us from Washington, D.C. Vicki?
Thanks, Jane. Good evening, good afternoon, good morning to those in Washington. I hope everyone has coffee or a beverage accordingly to stay stimulated and excited during the next hour discussion. Thank you to Jane and the Usaid team for the invitation to speak with all of you today. As Jane mentioned, my name is Vicki Gunderson, and I'm the Deputy Director for the Office of Investment, Energy, and Infrastructure at the Department of the Treasury. Our office sits within the Office of International Affairs, which is charged with protecting and supporting U.S. economic prosperity by strengthening the external environment for U.S. growth, preventing and mitigating global financial instability, and ultimately managing key global challenges. Our office, which is a newer office at the Treasury, the Office of Investment, Energy, and Infrastructure, leads Treasury's efforts to promote private sector capital solutions to energy and infrastructure financing issues to support responsible global growth. We work hand in hand with other offices at the Treasury, such as our Office of Technical Assistance, our colleagues located at the U.S. Executive Director's offices at the multilateral development banks, including the Asian Development Bank, and our interagency colleagues whom I'm excited to be here with today. So based on analysis that we're seeing through some work under the G20, and a hub that was stood up by a number of members, the Global Infrastructure Hub, we know that there's a near-term global infrastructure financing gap. This is to the tune of $15 trillion. That gap for the energy sector is a bit more narrow than other infrastructure segments, such as roads, but the dollar amount of that challenge is the second largest. So we're talking about an almost $3 trillion gap in infrastructure investment for the energy sector from now until about 2040. So our office is really focused on closing that gap, and how do we do that? We have a three-pronged approach. One, which is supporting U.S. engagement in multilateral institutions, including the G20 Infrastructure Working Group and our multilateral development institutions, such as the Asian Development Bank. We're advancing reform and oversight of development finance institutions. And the third prong, engaging bilateral partners through a series of framework agreements to catalyze private sector infrastructure investment in these countries. So policy dialogue, technical assistance, and really talking through some of those key issues, being a convener. So Treasury supports Asia Edge specifically by leveraging its core competencies, financial market development, enhancing market-based competition, and ensuring that infrastructure projects meet the needs of limited recourse project finance. So for the purposes of an introduction, I'll just note that much of this work is done through the third prong of this approach, or these tailored bilateral programs in the Indo-Pacific region. We started this work when Asia Edge was stood up, so it's only a few years old, but we're really focused on two of the key strategic objectives for Asia Edge: creating open, efficient, rules-based, transparent infrastructure markets, and two, improving fair, free, and reciprocal trading relationships. And so a few ways we do this: building financial markets, including infrastructure debt markets, domestic trading markets, developing wholesale markets, forward and futures markets, aggregation portfolios, other hedging instruments, having those conversations about financial markets, supporting specific infrastructure investment opportunities and tailoring them to make sure that they meet the limited recourse project finance bankability standards, improving and implementing bidding and procurement processes through technical assistance. We're advising utilities and governments on how to improve off-taker creditworthiness, and improving and providing technical assistance on infrastructure developments and financiers through credit rating processes. We have active programs across the region. I'm happy to dig into some of the details during the Q&A. We're working with both developed and developing country partners, and this is just getting started. So I look forward to the question and answer, and I'll turn it back over to Jane. Thanks.
Thank you very much, Vicki, for those remarks. We will now turn to Shannon Rowe, the energy sector lead for the Indo-Pacific at the U.S. Trade and Development Agency. Shannon?
Thank you, Jane. Good morning, good afternoon, good evening to everyone joining us from around the world. Thank you to my Usaid colleagues for organizing and for the invitation to speak on this panel. As Jane mentioned, my name is Shannon Rowe. I serve as Senior Manager in our Indo-Pacific region at the U.S. Trade and Development Agency, and also as our Regional Energy Programs Lead. USTDA, as we're more commonly known, serves as the U.S. government's project preparation facility. The hallmark of USTDA assistance is connecting overseas project sponsors and developers with innovative U.S. solutions for the development of priority infrastructure projects. We work globally in emerging economies, and we focus specifically on some key infrastructure sectors, namely energy, transportation, ICT, and healthcare. I would say at USTDA, we were very excited with the development and launch of the Asia Edge initiative and the U.S. government's larger Indo-Pacific vision, because the key prongs of these programs and approaches really align well with USTDA's longstanding belief and mission that infrastructure development really helps to power economic development. Our assistance typically falls into one of three buckets. We work on grant-based support for individual projects and transactions, and this includes grants for things like feasibility studies, technical assistance, or pilot projects. And I'll talk a little bit more later about the specific subsectors within energy where we can support activities. The second piece of our support or our assistance really falls into partnership building activities. These include conferences and workshops hosted in the region. Today, we're even exploring hosting some of these virtually, given the circumstances. And we also host a number of reverse trade missions annually, which bring decision makers, from our target market to the United States to interact with U.S. technology solutions, to see them in action, and to meet with their peers to discuss regulatory and policy matters related to infrastructure development. Since our founding as an independent agency in 1992, USTDA has supported more than 4,000 projects globally in more than 130 countries. Now I'll turn just a little bit more specifically to some of our energy sector assistance and some of our current work in the Indo-Pacific region. In addition to our offices in Washington, D.C., which is where I'm located, we do also have offices in the region presently at our embassies in Thailand, Vietnam, and India. We are also looking at expanding our footprint and hope to have new folks on the ground soon. So as you're working in our variety of markets, hopefully you can interact with someone in your real time zone even easier than contacting us in DC. Across the energy sector, we work in kind of the whole energy value chain, but I would say our primary subsectors focus on storage, generation, transmission and distribution, resource development, digitization initiatives, including smart grid efforts, energy efficiency, and then we do a lot of work in the space of modernization, particularly things like refinery modernizations and the like. Since the launch of Asia Edge, we have supported more than 40 projects across the Indo-Pacific region, and we currently have active projects, again, sort of across the entire energy value chain, including solar and storage, smart grid efforts, and work in the oil and gas sector space. I'll conclude by talking just about a couple of examples of our current work that will give a flavor for what we can discuss later during the Q&A session. But in Thailand, we are supporting the feasibility study for a solar plus storage project with a private company, Blue Solar. This is an exciting project for us because it is one of the first private sector deployments of energy storage solutions in Thailand, and that feasibility study is currently ongoing. In neighboring Vietnam, we are working with a long-standing partner, Vietnam Electricity, EVN, with their National Load Dispatch Center storage, National Load Dispatch Center subsidiary, apologies, on an energy storage project that would look at energy storage applications for grid management and for some of the issues related to the large amount of renewables that have recently come on the grid there, which I know many of you on this webinar will be familiar with. So for my intro remarks, I'll close there and hand it back over to Jane, but I look forward to hearing from you in the questions and interacting with more of you as this panel goes on. Thank you very much.
Thank you, Shannon, for those relevant comments. Next up is a speaker from the relatively newly established U.S. International Development Finance Corporation, Jeffrey Tan. He's the Managing Director for the Asia-Pacific region based in Bangkok. Jeff?
Thank you, Jane. Okay, there we go. Thank you, Jane. Much appreciated. And good morning, good afternoon, good evening to everyone. Also appreciate, as my colleagues, USAID putting this event together under the auspices of ACEF, and looking forward to the dialogue we're going to have today. As mentioned, I'm the regional representative for the U.S. International Development Finance Corporation. I'm based in Thailand. Fortunate to be in the region with most of you all. And DFC, as we're more commonly known, is new, but we have a long history out of what some might remember as OPIC, Overseas Private Investment Corporation. So the DFC was created, or went live, I should say, just in January this year. And so a lot of exciting things coming out of that. I won't go into too much detail. I'll try to keep my comments fairly concise and focus on the things that we offer and not the background behind. But as you may know, if you're familiar with OPIC, we are the US government's development finance institution. So our focus is catalyzing investment into the private sector in emerging markets. We do that through three main products and a couple of new ones that I will describe very quickly. Those are debt financing, so loans and loan guarantees. That's by far the bulk of what we do, especially in the energy space. We also have a political risk insurance program, very similar to what MEGA offers, if you're familiar with that. We also have a private equity program, probably less relevant in this space. And then two new exciting products that are technical assistance and equity investment. Excuse me. So, and I'm happy again to talk about them at length, perhaps in the Q&A session. But suffice it to say, what you can probably surmise from all of that is that we come into the stage of project development closer to the end, so to speak, right? When things are coming together and it's about time for all of the capital to be deployed to bring a project to fruition. So we do that again through providing debt, PRI, and so forth. But also now with our new technical assistance facility, we also have the ability to provide grants that can accelerate the development of a project and get it to bankability. In the energy space, of course, a lot of what we do is project finance for utility scale projects, and we've been doing utility scale renewable energy since the mid 2000s. And we also do small transactions as well, but those are corporate finance deals supporting typically young companies with high impact and very grassroots level activity. Cook stoves, solar home systems, energy services companies, and the like. Very quickly, a couple of things you may already expect or know. In terms of our policy requirements, we are very focused, as we said, on the private sector. So we're not engaged in supporting sovereign public sector activity, focused on emerging markets only. And in those contexts being what we call additional, right? So our role in a transaction needs to be, again, catalytic, meaning, but for the presence of a DFI like DFC, the project would not move forward. Put it another way, we won't compete with the private sector in terms of the products that we have. And then, of course, finally, on the policy side, as you would expect, we look for all of our projects to adhere to international standards in terms of environment, social, labor, etc. And finally, in closing, I just want to mention that most people, when they approach us, they think of course, of the financing, right? The funding, how much can you do, or what does it cost, and all that. And that, of course, is a critical piece of what we bring. But I think you should also keep in mind that when we are involved in a project, like any of our other colleagues on the call here, we also bring the possibility, right, or the option, shall we say, of additional support across the USG. And that can mean various things, in specific situations. But very quickly, I would say, in a specific transaction, what we often do, because we often are involved in transactions that are the first of their kind in a country or region, from whatever circumstance. Typically, that involves, discussions with the government and making sure everything is correct and bankable, as was referenced earlier. So we can bring that to the table. We can support the projects, again, getting to bankability by actually stepping in and discussing those points with the government and bringing the perspective of a development finance institution, which is very different than a private sector perspective, right? Definitely from the perspective of a host country government across the negotiating table. It's a very different kind of dynamic. So I'll leave you with that. Thanks again, and I look forward to the discussion subsequent. Thanks, Jane.
Thank you, Jeff, for those informative remarks. And for our last speaker of this segment of the panel, we'll turn to Daniel Tobin, the Managing Director for Power, Structured, and Project Finance Division at the Export-Import Bank of the United States. Dan?
Good morning, good afternoon, and good evening to all attending this panel. My name is Dan Tobin. I'm Managing Director of the Power Group in the Structured and Project Finance Group at the Export-Import Bank. Just a little bit of information about EXIM. It's an independent agency of the U.S. government established in 1934 to finance the export sales of U.S.-made goods and services. Back in December, we were reauthorized for 7 years with a specific emphasis in investing in energy storage and renewable energy technologies. There's been a bit of a carve out that was set aside from the US Congress to kind of focus our investment efforts in this space. We can provide direct loans, loan guarantees, both in US dollars and foreign currencies, export credit insurance, and working capital guarantees. EXIM has had a long history of being in the forefront of financing projects important to both US exporters and international customers in times when access to long-term financing on commercially viable terms has been constrained. EXIM financing is usually the most cost-effective source of financing for international customers purchasing US-made technology. Right now, the current 18-year fixed interest direct loan rate for a project finance loan is 1.87%. The current 12-year fixed interest direct loan rate for a project finance loan is 1.53%. So these are incredibly low interest rates available for building out projects. Under the OECD export, we are able to offer maximum tenors of up to 18 years for wind projects, geothermal projects, tidal projects, solar PV, solar thermal, ocean thermal, biogas treatment, and hydropower. And we're able to offer 15-year tenors for waste to energy, hybrid, combined heat and power, and district heating projects. And then for all other power projects and all other commodity projects, we can go up to a tenor of up to 14 years. So since 2010, EXIM has authorized $2 billion in renewable energy and conventional power exports and billions more in commodity exports. As part of our due diligence, we must have a reasonable assurance of repayment. So we are looking for projects that are in the advanced stages of development, projects that have executed offtake arrangements, offtake agreements, power purchase agreements, advanced stages of EPC development. So the types of projects that we can finance are, and how we can structure it include corporate financing, where we require current credit report, commercial bank reference and financial statements for the past 3 years, or we could do a limited recourse project financing, where we set up a special purpose company borrower and the project cash flow as source of repayment. And this is usually for loans greater than $20 million. And then we can also do structured financing, where we use the borrower's balance sheet enhanced by special features, and this can be a useful approach for loans under $20 million. So really, from my group, we offer two real main products: direct loans and guaranteed loans. Direct loans can be made by EXIM to a foreign buyer. Essentially, the international borrower will submit the direct loan application, and EXIM will require the buyer to make a cash payment to the exporter equal to at least 15% of the US supply contract. The 15% cash payment can either be borrowed from a lender or the exporter, or be from the borrower's own funds. And then from guaranteed loans, they can be made by commercial banks, US or foreign, to a foreign buyer with 100% unconditional repayment guarantee from EXIM. Application to the EXIM would be submitted by the lender, and the guarantee covers 85% of the US content of the transaction. With that, you would negotiate the interest rates with the commercial bank. It's often a floating rate, and it's based on a spread over US LIBOR rate. Banks also offer fixed interest rates. The loan is fully transferable, and it can be securitized, and banks often finance the 15% required cash payment. So guarantees are available in major foreign currencies, including Indonesia, rupiah. Lots of Asian currencies are available. EXIM's loan guarantees can in turn support capital markets in local currency. So in conclusion, EXIM support was the catalyst that crowded in hundreds of millions of dollars in additional equity investment and bank lending for dozens of projects around the world. EXIM supports short, medium, and long-term financing to creditworthy international customers and working capital guarantees to US exporters. And EXIM financing is usually the most cost-effective source of financing for international customers to purchase US-made technology and services. EXIM can finance services including software and licenses, as well as products. So in conclusion, we welcome your projects and your ideas. Look forward to the Q&A. Thank you.
Great. Thank you very much, Dan, and thanks to all the panelists. It was great. It was very informative. Right now, I'd like to move to address some questions to all of you. And I'd encourage the audience to also submit questions through the Q&A panel that's on the right-hand side of your screen. We've gotten a few come in already so far. We encourage you to submit more, and we'll be getting to them a little bit later in the session. So we have about 50 minutes left. So what I'd like to do is, if I could invite the panelists to turn on their cameras, so we could have a bit more of an interaction while I pose some of these questions to you. You've all provided some background about the kind of work that you're doing in and around Asia, but given there is no homogeneity across all of Asia, size, diversity are all different. Are there specific geographic areas of focus that your organizations target, or are there specific priority countries that your organizations target? So maybe we'll start with Vicky from Treasury. Any thoughts on that? Any areas of particular focus for you for Treasury?
Sure, Mark. Thanks for that. As noted, most of our work in Under Asia Edge is being developed through bilateral framework agreements, so negotiating MOUs with particular host governments. Currently, we have existing MOUs with a handful of developed countries, so Korea, Japan, Singapore, in the works with Taiwan in the region. And so thinking about both bilateral trade and investment in those particular places, but also thinking about work in third countries. In the developed country markets, we have a focus currently on Vietnam, Indonesia, Thailand, with some exploratory conversations in Philippines and Malaysia. But our work is a bit earlier in the process than I think many of our interagency colleagues who have long-standing, decades-long programs. So I'll leave it there, but particular focus both in developing and developed country markets.
Great. Thanks very much, Vicki. And maybe Amanda, to you from the USAID perspective, are there particular markets or areas that are of significant interest to USAID?
Sure. Hi. Thanks, Mark. I can just say a bit, as I noted in my opening remarks, USAID is supporting energy activities across Asia, from Indonesia to the Philippines, to the Mekong, to South Asia. I sit in Bangkok and I'm with our regional development mission for Asia. So our activities here are regionally focused, and we have a program called Clean Power Asia and the Advanced Energy Partnership for Asia, which are our two main regional activities here in this region that cover several countries. In addition, we have what we call bilateral activities in specific countries. So in Vietnam, for example, there is the low emission energy program, VLEAP, that I mentioned, as well as the Vietnam Urban Energy Security Program. And in Indonesia, we also have the Clean Energy Development Activity, as well as the Partnership to Advance Clean Energy Deployment in India. And that's just naming a few. In terms of, we expect Asia to continue to be a focal point for our activities, both under Asia Edge and more broadly with USAID. We have new activities and activities expanding in several countries in this region, including Philippines, Laos, Indonesia, Vietnam, India, and others. So, we will continue to work very closely with our other interagency colleagues to help grow the growth of these markets and help to build up and support the enabling environment to open up these markets for U.S. and other country investments. So look forward to continuing the dialogue.
Great, thanks, Amanda. Katie Clark, on to you from your perspective from Department of State.
We work basically with almost everyone, just similar to USAID, both regionally and bilaterally across South Asia and Southeast Asia. I would say regionally, we work with ASEAN very closely, and then we work bilaterally with countries. We also work with the Mekong regionally, and then bilaterally with countries including Cambodia, Laos. We're working on some interconnection, power market reform, energy efficiency, Thailand, Vietnam. We also have strong bilateral relationships with them. Across South Asia, we've got Bangladesh, Sri Lanka, India, and many others. But I think, one of the things we kind of take into account when we're engaging are factors from geopolitical to technical, and we really look for basically if a country wants to engage us, and then what they need. And so that's kind of the big factor in what we do and where we do it.
Great, thanks, Katie. Maybe on to Shannon for your perspective from US.
Thanks, Mark. So as a pretty demand-driven agency, we are able to work with both the public and private sector in any emerging market globally, but we have typically focused on a few priority countries for business development. Most recently for us in the Indo-Pacific region, this has included Thailand, Vietnam, Malaysia, Indonesia, the Philippines, and India. But particularly since the launch of the Asia Edge initiative, we have been looking to expand our regional footprint and are open to talking to compelling projects really anywhere in the region that kind of meet our income classification guidelines. So presently, we are having conversations with projects in places as far-flung as the Pacific Islands, as well as looking to expand our work in South Asia outside of Indian markets. So really anywhere that there is a compelling story along a trade and development nexus, we're happy to talk to project sponsors.
Excellent, thanks. Maybe Jeff, to you from DFC.
Sure, thanks, Mark. So for us, similar to TDA, we are very much demand-driven. We support the private sector in their efforts to invest in countries. So really, they are the ones who kind of determine what makes sense in terms of their business strategy, right, and financial return. So to a certain extent, we follow them. That said, I will say we are focused on a couple countries, a few countries really within the region, those being Indonesia, Vietnam, and of course India. But again, not to say that we wouldn't look at activity or investments elsewhere, again, because I think we're really keen to expand our exposure and activity across the Indo-Pacific. Thanks, Mark.
Great, thanks, Jeff. And finally, to Dan, are there particular countries or areas that that EXIM is targeting?
Yeah, we're actually open for business wherever. I mean, ultimately, we're looking for countries that are what we view as good investments. Indonesia, the Philippines, Vietnam, Thailand. All of these countries, we've seen activity and interest from project developers. Again, we are demand driven, so a lot of this is really dependent on where the projects are being proposed. However, I just suggest to everyone, if they're interested to see if we're open for business in a specific country, that they just go to the EXIM website and go to our country limitation schedule, and it'll just indicate whether or not we are open and can provide cover for deals in that specific country. And that's it.
Excellent, thank you. What I'd like to do now is target really maybe the transactionally focused agencies, TDA, DFC, and EXIM. For this next question, I wanted to put this out to all three of you for the audience to get a sense of when is the appropriate time for a developer, a government, a borrower, or a sponsor to really contact your organizations. At what stage in the process is it most appropriate for them? And also looking at that from a project perspective, how do the three of your organizations work together to help support the development and implementation of that project? So I'll open it up to any of the three of you to start.
Okay, maybe I'll start off. From our perspective, for doing limited recourse project financings, we're typically looking for project sponsors to come in at a pretty advanced stage of project development. This is past the feasibility stage. This is where project sponsors have site control. They have negotiated their EPC contracts. They've negotiated their offtake arrangements. They're at a very advanced stage where their project meets all the bankability requirements. So from that perspective, we like to see that they're advanced stages of equity development. They've identified who their equity investors are going to be, and they fully understand the capital structure of their project. We are very interested in working with other agencies. In fact, we just recently tried to set up a dialogue with the DFC on a potential project in Latin America. So we will work with other agencies together to try to finance and provide co-financing debt to projects when appropriate. So that's it.
Okay, Mark. So for us, I think similar to EXIM, we kind of come in at the later stages of a project development, maybe a little bit earlier than EXIM. I think we're used to being in situations where the project is not quite baked. I mean, yes, sponsor group is pretty much there, land is there, maybe the PPA, and EPC haven't quite been defined or inked yet. And we think all that is actually quite appropriate. And I would say actually with our new tools, right, our technical assistance tool, which is geared to accelerating a project's advancement into bankability, we can be involved in projects now even earlier than before. So let me just clarify kind of those 2 points, right? So the first one, being just a little bit earlier, maybe than EXIM, is kind of what I alluded to earlier, where maybe not uncommon for us to come to the table and say, well, we as DFI and as an international lender, we really would like to see, international arbitration or what have you, because we think that's the right answer now for the government's program, and the right answer not only just in terms of closing our deal, but really in terms of the government succeeding with its program in attracting private capital, right? Because private capital is where the real money is. Also at that stage, coming to us at that stage allows us to give the sponsors input on, again, the PPA, of course, but also on the EPC, particularly with respect to environmental, social, and labor issues that we want to weigh in on and make sure that things are being done in a manner consistent with our policy. And finally, quickly, just to comment on the technical assistance piece, and I hope Shannon will speak after this, but to differentiate from TEA, who I think gets involved a little bit earlier on in the project development process. Again, for us, we want to see projects that have already been quite well developed and are engaging with us with a view to obtaining financing from us, but maybe something along the way has come up that needs a bit more work, and for whatever reason, the totality of funds aren't there to provide for it. We can come in and co-fund, a limited scope of work to address that issue. An example would be, let's say during our preliminary due diligence on environmental and social, we find something that needs a little bit more in-depth review. Maybe we can co-fund that with the developer, and that hopefully then will speed up, again, accelerate the development of that project and get it to bankability to a place where we can finance it. So that hopefully gives you a little bit of a picture on when's the right time to engage with us. And more broadly, I would say I'm always receptive to questions and ideas, and I'm happy to give people feedback, as to when specifically in their context is the right time for a conversation with the EFC. Thanks.
Thanks, Jeff. I was going to say, as perhaps we've done this in a little bit reverse order, because I think USTDA, probably among the three of these peer agencies, intervened sort of the earliest in the process. We are, very comfortable working in the earlier stages of feasibility study support or other types of project preparation. I think it's important to clarify, typically by the time a project has come to us, they've done some pre-feasibility work. They have a lot of their kind of project particulars fleshed out, though maybe not, always fully signed and dotted in the way that they would need to be able to approach a borrowing institution. But, we are looking to see what work has already been completed, things like what financiers the project has already spoken with. And then we are able to, support some of that early stage support, early stage project preparation support, knowing that, our work may result in a project that can advance or may result in a project that is deemed to be infeasible. I would say in terms of working with our peer agencies, particularly with EXIM and the DFC, we are, as a major part of our analysis, both looking at what financing institutions are likely to come into the project, but also working with our project sponsors and partners overseas to help expose them to the range of financing options that may be available. And because USTDA really focuses on that nexus of infrastructure needs and U.S. solutions, obviously EXIM and DFC are a natural fit for us to help try to, prepare projects to go into their pipelines. So I think that's, a key way. We're frequently in contact with Dan and with Jeff and with other, their teams and coworkers on projects to understand what would be needed to make sure our assistance helps to get projects to that stage, and to really look at how we can support a whole of U.S. government solution for the development of some of these projects.
Thank you, all of you, for that feedback. It's certainly informative to get a better sense of how the three organizations work together and complement each other. I'd like to put the next question to Katie Clark from the State Department. You mentioned in your opening remarks about a diversified and tailored approach to energy security, and provided some of the examples of ENR's clean energy work in the region. Can you expand a little bit more on the connection between clean energy and energy security that you see, and how that fits?
Yeah, thank you very much, Mark. And I think I saw in the Q&A there was also a question on grid resiliency and renewable uptake into the grid. And I think that this apropos, I think that renewable energy, clean energy, when it's implemented correctly and right, can be very beneficial in enhancing security, both in increasing energy independence for countries and allowing countries to have more control over their own grid and their own fate. And so our programs really look to helping to integrate and get the renewable energy uptake right, helping to get these technologies on. And one of the examples I would give is work that we're about to launch with ASEAN on digitalization. And digital technology platforms are becoming increasingly deployed across, throughout the energy systems, all the value chain, and they can make energy systems much more efficient. And as we've seen with COVID now, they can really kind of enable a lot of remote access to systems to be run remotely. So there's a lot of benefits to them, but I think if they're not implemented correctly, you can have stranded assets and then also vulnerabilities. Smart meters are an excellent example of this. So we're really going to be working on helping to support NIST standards. They're voluntary, they're open source, on best practices for implementing these technologies with the Pacific Northwest National Lab. And that's going to help with renewable energy integration, because a lot of the systems we're going to be focused on are the ones that will be running the renewable energy system. So anyway, that's my answer.
Great, thank you, Katie. I'd like to turn to a topic that I know is at the forefront of everyone's mind and is really the reason that we're getting together online as opposed to in person in Manila as we have in past years, and that's the COVID pandemic, excuse me, which has been, quite a topic of conversation over the last four days. So Vicki, from the Treasury, given this COVID-19 pandemic, how do you see clean energy markets changing, and what is the Department of Treasury doing to address any of the effects on clean energy investment in the region?
Sure, thanks, Mark. I mean, the effects of COVID-19 are being felt by all of us and across many market segments, energy being one of them. A couple of observations, which I hope you'll probably see in the Usaid report that we're seeing as we talk to our partners, our team in the region, the multilateral development banks, and our U.S. agency colleagues. You're seeing in the energy sector, demand projections are changing. You're seeing revisions of plans. You're seeing fluctuations in that. And global locations are seeing largely a decrease currently. We're seeing governments suspend payments to the lowest energy users or lowest income customers to provide household and business relief, so response efforts, which is changing the financial market and the financial implications for both utilities and governments as they think through how to pay for that process. In some places, we're seeing tariff rates be just cut, or in places where cost-reflective tariffs were planned to be increased, you're seeing delays in that potential increasing, so that has some effects. In some locations, you're seeing new builds postponed, either for protection of safety reasons, access to parts and components, given global supply chains. We've seen government resources that were slated for new infrastructure actually be rediverted to COVID response. And so a shortage and a reallocation of cash. And then on the opposite side, for response effort, we're seeing stimuli measures for infrastructure stimulus. This was something the U.S. did in 2009, but we're starting to see it in particular markets. Thailand is one example. Ultimately, the responses are diverse, they're varied, they're unique to every particular market. However, one thing is consistent. There's a lot of market uncertainty. Financing discussions are going to be increasingly critical going forward as market liquidity is limited. And so what we're doing really is having those conversations with our partners, those foreign governments. How do you gain access to the cheapest form of capital? How do you raise new capital through asset recycling programs, especially if you have public procurements? How do you prioritize projects if you've rediverted money or you're thinking through where can I leverage private sector investment? And then how do you really strengthen private sector investment opportunities so that you limit your debt increases on government balance sheets? It's going to become increasingly important. We've started those conversations with a number of our partners under Asia Edge. We're using those bilateral frameworks in order to have those conversations. We're sharing best practices. Just last week, we spoke with the Ministry of Finance in Vietnam to have this conversation. And we're providing, where it makes sense and where our partners are interested, concrete technical assistance to help provide the advisory services in order to address these questions, because the devil's going to be in the details for anything, and the response efforts are going to need to be varied. So thanks for that.
Great, thanks, Vicki. And maybe Amanda, a similar follow-up question to you. What types of energy-related activities is USAID undertaking as we navigate this COVID-19 pandemic?
And thank you, Mark. Yes, as an organization, USAID has committed over $1 billion to help fight COVID-19 around the world. Our priorities are to protect the safety and health security of our workforce, and ensuring that we can continue our life-saving missions across the world and help partner countries to respond to this pandemic. So at the regional level, and focusing specifically on the energy sector, we've been working very closely with our colleagues at the National Renewable Energy Lab and have recently launched an Ask the Expert online resource that connects government stakeholders with utilities and power system operators and policymakers with a network of experts who can assist with addressing COVID-19 impacts and brainstorm ideas how to mitigate these. And this is a no-cost service that's connecting individuals to experts in energy system response, recovery, and resilience. In addition, with our cooperation with NREL, we just released this report this week on the impacts and opportunities associated with COVID-19 and the power sector in Southeast Asia that was highlighted at the panel session yesterday. For those of you who may have joined that session, you probably heard more about the analysis, which is showing a very early assessment of the impacts in this region and opportunities for building resilience and response measures to recover from these impacts. As we all know, we're kind of dealing in real time with this right now. So I think it's going to take some time to sort of see what the longer term impacts are, although we all know, and I found it interesting in some of what I read in that report that we all probably could realize is industrial demand in many places has turned into a typical Sunday demand. And residential demand has increased because we're all in our homes now using air conditioning, using the internet, using our electricity, all of those things that we take for granted that are all shut off when we leave and go to an office every day. We are also working in Philippines and will be undertaking an analysis of the impact of COVID on the power sector in Mindanao and helping to identify the impact of power sector demand and develop some business continuity plans for the electric cooperatives and distribution utilities there. And in addition, in terms of how we're shifting the way we do business and our programming, obviously a lot of the work that USAID does is on the ground, working hand in hand with our government, private sector, and development partner colleagues. And unfortunately, we can't do that now. So we're trying to pivot quickly and move as much of our work to a virtual environment as we can. That makes at least what makes sense. We're planning to launch in July an Asia Edge Power Sector Learning Series. And this series of webinars is going to provide virtual training on power sector planning, resilience, grid integration, power sector modernization, and a lot of different interesting topics. It will feature experts from around the world who will be able to share cutting edge approaches and best practices. And, we hope in the coming months, at least here in Asia, we might have some opportunities to start moving around and meeting in person and providing some of that technical assistance and training and capacity building in person. But for now, this is the way we're all having to do business. So we're trying to maximize the opportunities in a virtual environment.
Thanks, Amanda. And building off that, I'd like to sort of put a follow-up question to Shannon. Amanda just mentioned how USAID is adapting to this and sort of changing the way they're operating. How do you see USTDA's work being impacted or changing as a result of this environment? And what can we expect from USTDA in the future to help partners recover and respond to these types of crises?
Thanks, Mark. Yeah, so I think from the USTDA side, there are a couple of different pieces to this puzzle. There's the sort of immediate practical ways that our work is changing, and similar to comments from Amanda and some of my other colleagues here, we are looking at our options for, obviously our staff is currently all working remotely, but we're looking at options to rebuild the connections that we typically have, in person with partners. So whether that means things like virtual workshops or virtual trade missions, these are, the types of things that are being discussed in-house as an immediate, sort of practical consideration. But beyond that, there's sort of the bigger strategic question. And I think as a demand-driven agency, TDA has historically been involved in some different types of disaster response and recovery. In Thailand, after the 2004-2005 tsunami, we were involved in the development of the emergency response center there. And, we are looking at very near-term opportunities for that type of thing in some of our other sectors like healthcare. But in the energy space, I think what the strategic conversation really boils down to is a question of resilience and increasing our focus with our partners on how to do things like grid modernizations and upgrades, distributed energy resources, potentially some off-grid work that will ensure that, there's energy access and continuity, both, as an immediate practical need, but for underlying other critical services like ICT and healthcare that can be delivered remotely when there is consistent and reliable energy access. So I think that's sort of an overview of what you would expect to see from us as we look to the future.
Great, thanks. And I wanted to touch quickly on some infrastructure financing and infrastructure financing gaps. We're hearing a lot about that this week. Vicki, you mentioned it in your opening remarks. Can you talk about financial tools that you think are best positioned to address some of these gaps, and how can Treasury work to sort of put these tools in the marketplace?
Sure. Thanks, Mark. As noted in the opening remarks, $15 trillion for all of infrastructure globally in that gap. Lately we haven't really seen much material growth in debt markets for infrastructure over the last decade or so. And infrastructure debt for emerging markets remains pretty limited. Secondary markets remain illiquid, and so we're not achieving infrastructure as an asset class, and there's a variety of reasons why. But I think to Jeff's points and Dan's points, how do we crowd in more money for infrastructure, and specifically for this context of conversation, the energy sector? One of the things that we've been discussing with our partners is really thinking about institutional capital. There's $80 trillion plus in institutional capital available, private and public pension funds, insurance companies, sovereign wealth funds. And you can imagine if a small fraction of that were allocated or invested in infrastructure, this could be transformative. It could close the gap. It requires really just a modest shift in some ways. And institutional investors are really best placed to act as a secondary market for infrastructure loans. They have similar expectations for tenders. They can act as long-term holders of portfolios. They allow commercial banks to recapitalize and increase lending. And so that recycling component, it creates an evergreen pipeline per se of new infrastructure loans, thinking about by the purchase of pension funds, insurance funds, traditional asset managers, and really increases and frees up that liquidity in the marketplace. So we've been having these conversations. They're early, and candidly, COVID-19 has caused some pause and thinking through is the timing right. However, we're seeing traction with our counterparts in Singapore, really seeing this actually start to come into place. You're seeing that first procurements related to development of special purpose vehicles in order to achieve this. So thinking about how do you do debt aggregation, how do you bundle projects? It's one of the conversations we think is really important, independent of the traditional financing mechanisms that have been in place, the debt markets that we've seen and heard about to date. That's one example.
Excellent. And continuing on lines of infrastructure financing, I wanted to turn to Jeff and to Dan to ask about project size. And, Jeff, is there for DFC, is there a minimum project size that's needed to generate DFC support?
Thanks, Mark. I would say no. Of course, that leaves it wide open, right? But what I would like to kind of redirect in terms of answers, really it's driven by project economics, right? So project financing is a very kind of transaction heavy exercise. And typically, and again, I think this standard kind of perception or practice in the market, if a project is less than 100 million in total project cost, it's going to be difficult for that project to absorb the costs associated with a limited recourse project financing, right? And so for the larger energy projects, larger utility scale, renewable energy projects and the like, I think that's kind of the guideline. That said, I think, I know we've done deals that are smaller than that. We of course try to find ways to minimize transaction costs in those situations, and also can be more flexible in certain situations where we feel there's either a additional developmental angle to it, or a certain foreign policy kind of priority to the investment at hand. So for project financings, I would say, we can probably stretch it down to 30 to 40 million at a stretch. And then just to close out, again, I want to reiterate that we do smaller deals, even in the single digit millions in the energy space, clean energy space in particular. But again, those are for companies, and again, typically young companies that need capital for growth. I mean, they're past the VC funding stage and all that. They're ready to grow, and they can take on, $3, $4, $5, $7 million of debt with a reasonable amount of comfort. And we feel that in those situations, again, given the high development impact, and typically there's multiple SDGs that are ticked off by some of these projects. There we will also take on a little bit of extra risk, shall we say, because typically those projects, those investments don't have, so to speak, all the data that we normally look for during a credit underwriting process. Thanks.
Great. And along similar lines, Dan, for EXIM, is there a minimum loan size for the projects that are seeking debt financing?
Thanks. There actually isn't a minimum loan size, but as Jeff indicated, standard project financing and the costs and due diligence costs of doing an analysis of all the risks and mitigants and all the ultimate underwriting that has to be done, it generally makes sense for projects to have at least capital costs of a minimum of 25 million from our perspective. I mean, we can go lower than that. But generally speaking, if it makes it worthwhile for the project sponsor to invest and pay for all those due diligence costs, your project size is going to be at least a minimum of 25 million. If you do want to propose a project that's less than that, maybe there's the possibility that we could aggregate the project so that we can get it up to 25 million, but we'd want to see similar credit quality characteristics of the off-taker and or the other participants. But generally speaking, as Jeff said, that this is really one of the areas that we've kind of struggled with over the years. But ultimately we're limited by the overall costs, which generally could, in some cases, reach significant numbers to pay for independent engineering, to pay for market review, to pay for legal advisors, all that stuff. So, yep, and that, I guess, that's it. Thank you.
Great. What I'd like to do now is take some of the questions that those in the audience have put forward. The first one doesn't necessarily have somebody it's directed to, so I'll put it to the panel here and maybe to Katie or to Amanda. But the question is, what are the plans for increasing regional cooperation in cross-border power trade in Southeast Asia, like the SARI EI initiative in South Asia, which has done tremendous thought leadership work in promoting regional cooperation in South Asia? So any thoughts from the panelists about working to support regional cooperation and cross-border trade in Southeast Asia, and anything that your agencies are working to support?
Katie, do you want to go first or should I?
Since they mentioned sorry, do you want to go first and then I can talk? Okay, great.
Yeah, sure. I'll just speak a little bit about some of the ongoing work we've been doing here through our Clean Power Asia program, which has been working in the region since 2016. We've had an ongoing partnership and work with under the AIMS 3 process, which is under ASEAN, the Interconnection Master Plan Study process. We are not the only development partner involved, but we are working closely with the ASEAN Center for Energy and working to inform and engage with ASEAN on that process with Papua and others. If some of you joined the cross-border trade side event on earlier this week, there was more of a discussion around the work that IEA is also doing in this space. So it's a very collaborative opportunity for us to be working with many other players in this region to kind of build up the capacity and support for regional planning. So that's where we are. That's where the crux of our work is right now. I think we will continue to work in this space as we go forward, as Asia Edge continues, as our programming grows over the course of the next year. We've really launched a lot of new programs here out of RDMA just since I arrived here in Bangkok last summer with the launch of our NREL partnership, as well as our Asia Gas partnership, where we're working closely with NARUC and with USEA. So I see this issue is something that a lot of donor and development partners, including the Asian Development Bank, are engaged on. And I see that we will continue to be working in that space going forward.
And Amanda, just to add to what you said, I think we're also seeing that same level of increased engagement, and something that we're working on with Usaid and then also the government of Japan is a newly launched Japan-US Mekong Power Partnership, or JUMP. And that's promoting regional power trade, technical assistance for renewable energy integration frameworks for distributed solar, and power market reform that would begin to introduce competitive markets into the Mekong countries. And the Mekong is a priority region for the U.S. to reduce unsustainable hydropower development and encourage U.S. investment in diverse energy technologies and high quality and transparent infrastructure investment. So that's just kind of an introduction to that new program as well. And that is going to be kind of focused on regional power trade.
Great. Thank you to you both for that feedback. The next question, maybe to Jeff or to Dan or Vicky, do you envision any credit enhancement tools for off-takers, and how do you intend to overcome the usual capital origin and assets ownership limitations usual in most ASEAN markets? Any thoughts from any of you on that question?
I'll take a stab at it. And I wasn't quite clear on the second part of that, but with respect to credit enhancement, I think there are efforts underway, and again, I think Vicky will speak to this and others, but from our perspective, we as a DFI are not really in the position of supporting sovereigns and therefore providing them with credit enhancement to support their ability to borrow or to be a counterparty to a PPA. Rather, what people typically ask us, right, is whether or not we're willing to take the risk of a certain off-taker, of a certain utility, et cetera. And so if I can flip the question around a little bit, the question becomes, are you willing to take on more risk now than you were before? And the answer to that is, I think at a very high level, no, meaning we still like to see international kind of standard practice in terms of risk allocation, especially in new markets for new initiatives. But at the same time, I will say that we want to be current and staying with the markets, which I think are demonstrating a certain level of flexibility. Let's put it that way. And I'm not saying we would bend all the way, so to speak, but clearly the example of Vietnam and its at least nominal success in terms of attracting investment to put in for 4+ gigawatt of solar last year that's definitely a very, very strong data point to suggest that flexibility is needed. Now, at the same time, those of you who know that market also know that a lot of that a lot of that capacity is being curtailed, right? So clearly, some of the things that we were looking for when looking at those initial transactions, we would still want to see. But I think the crux of it comes down to being comfortable that a government is committed to a program and will stand behind it. So what Vietnam does in this particular example, with the situation that it has, with all of this solar capacity online that's getting curtailed, et cetera, what it does now with the next round of solar or even the current round of wind, I think that will be telling, right? And so to what I'm trying to say is, if they make the right moves, right, and preferably that will include adjustments to the PPA, but if they make other moves that suggest that they are very supportive of private sector investment and are willing to make accommodations, reasonable accommodations to make those investments sustainable, then I think we'll be quite flexible as well. Thanks.
Vicky, anything you wanted to add to that, or Dan, anything from your side?
Yeah, I would just say I would second what Jeff said with respect to the off-takers and credit enhancement tools. I think the question, what they're trying to get at in terms of asset ownership limitations, I have heard of issues in terms of Indonesia, where there's this requirement that a certain amount of the solar panels be sourced from within the country, and the ownership, there may be some ownership issues with respect to that. I can't really speak to that. I know with Export Import Bank, we finance U.S. exports. So if, let's say, U.S. solar panels are coming into Indonesia and they're manufactured in the U.S. And it has U.S. content, I can't really speak in terms of how that would impact the ability for project developers out projects in that space. And I wonder if that's something that needs to be explored a little bit more with the regulatory agencies or folks who are involved in that space. But that is a good question.
And I can just add, I think in our government to government conversations, to Jeff's point, it's really about risk mitigation and understanding who's best able to take on a particular risk. That's going to vary project to project, country to country, market to market. And so ensuring the right tools and facilities are there to mitigate the risk, make the project bankable, make sure it's up to international standards is going to vary. On the build, own, operate, who owns it, how does that work? There's going to be a variety of different mechanisms, levers, structures. Those may differ depending on the type of project, the criticality, the ability to who's financing it. Is financing available from the public sector, the private sector, local markets, regional markets, or really is this needed for foreign markets to access that capital? As I noted, we know there's a gap, and the ability for free-flowing capital from foreign markets to emerging markets to foreign, this becomes really important. And so structuring those deals in the best way possible to attract the right stakeholders becomes critical. And so we're finding it's project by project, country by country. Hope that helps.
Great. We've got about 5 or 6 minutes left, so I wanted to put one more question out to all the panelists here. I know this is something that you brought up, a couple of you, and sort of passing reference in your opening remarks and some of the other components, the other questions that we've discussed in the last hour or so. As we hear, private sector engagement involving the private sector is a key element of Asia Edge. In the audience today, there are certainly a lot of private sector individuals, both from the U.S. as well as from Asia, who are represented on the call. I wanted to give you the opportunity to all of you, or to any of you who's interested, to maybe provide just a bit of brief remarks about what opportunities the private sector may have to work with you, and how are you working to engage the private sector to support energy sector development across Asia. So I'll really.
Sure, I can.
Oh, go ahead, Katie, please.
I think that was me, Mark. It's Shannon.
Oh,
sorry.
I'm sorry, Shannon,
for
please.
any confusion. Yeah, so I was going to say I can jump in on that. I mean, obviously, interacting and engaging the private sector is a key part of USTDA's mission. It's critical to the way that we implement our program. I would say that, we have a couple of different ways that we do that. First and foremost, the private sector is front and center in our workshops and reverse trade missions. And there is always a U.S. private sector partner engaged in our technical assistance tools as the contractor performing, the work, whether it's a feasibility study or some other type of pilot project or technical assistance. But beyond that, we do a lot of other more informal engagement, including working across the interagency. So things like, presenting to various, industry groups, as well as things like advisory committees that are run by the Department of Commerce and others that really, focus on the private sector aggregation and engagement piece. So I think, maintaining relationships, obviously, with our overseas partners and the overseas private sector as well is very important. But with the U.S. private sector, we, as I said, really maintain relationships with individual companies, with industry associations, and across the whole of USG.
I'll add a little bit from DFC's perspective, since all we do, frankly, in terms of transactions anyway, is private sector. And there, again, in terms of working with the private sector, we communicate constantly, frankly, with the market to try to understand where the market is going, so to speak, where interest lies, where the opportunities are, and how we can support. And that's done through various, mechanisms, shall we say, conferences, even virtual ones like this, to just basic networking, to outreach through American Chambers of Commerce or even U.S. ASEAN Business Council and the like. And really, again, because we are demand-driven, the private sector is very critical in how we look at our markets and where we think we're going to be active or successful in our initiatives, where we do have priorities. And again, so I would encourage others to reach out to me, if you are interested in DFC support at some stage. Again, you can reach out to me at a very early stage, at least to get an idea of how we look at things and how that might affect the things that you need to do to develop your project. The one final note I would say is, as everyone here can see, there's a whole suite of U.S. government tools available to support the energy sector in the region, and of course the private sector as well, because I think we all recognize that's going to be a key source of capital and support for the investment that's needed. So, I think I speak for all of us when I say you can reach out to any of us, and if we're not the right ones to handle your question, we'll find the person who is. So, please feel free to reach out to any of us.
And I guess, Jeff, that's a great point. I just want to echo that, the point that Jeff and Shannon just made, that we have basically a secretariat for Asia Edge in DC, where we work through committees and subcommittees throughout our, all of the agencies involved. And so, as Jeff said, please reach out to any of us, and we can, if we're not the right people, we can find the right people. But I think also in our engagement with the private sector, another thing that we look for is where, we want to hear where you think things will be successful, but we also would love to hear where there are challenges. Why aren't you investing in certain markets? Because we do have tools, in the technical assistance range and the diplomatic range, to have conversations if there are trends on the whole that are keeping access from markets, it's great to be aware of what those are so that we can try to help unstick those and unlock those. So that's the only thing I would add.
And if I could just add one last statement too, with respect to working with the private sector, we do that on a every single day. It's a continual engagement that we have with the private sector. In fact, in order to be successful, we need to have good relationships with folks in the private sector. Just recently, one of the challenges we've been dealing with in the renewable energy and energy storage space is understanding what are the challenges for getting export-import financing for their projects. And we've been holding these transformational export initiative meetings with industry to understand their needs, which is great because we're using this input to be able to come up with ways to adjust maybe either our content requirements and or our internal policies to better fit the needs of the renewable energy and energy storage industries. Not just those industries, but all the industries we work with as well. So the private sector is critical and crucial to everything we do.
Great, thanks, Dan and Jeff and oh, sorry, Amanda.
I was just jump in. I think as everyone's leaving, a couple of final thoughts. I think echoing what others have said, I think the most important point to drive home here is, the outreach can be to any one of us in terms of those sitting in countries around the world. We've got a whole working group team here in Bangkok that works very collaboratively. Similarly, in many of the other countries in this region, there are great groups of people that are already meeting regularly in our U.S. Embassy and want to help. So, we're happy to help make those connections for you. If you're not sure where to go to, contact any one of us and we can make those connections for you.
Excellent. Thank you very much to everyone. And before we wrap up, I did want to put a link up on the screen to some additional materials that the panelists have developed that's available for you to download, some basic background on the agencies themselves, on Asia Edge and other U.S. government resources. So that should have just appeared on your screen. We also got a question about making the email addresses available. That is appearing on your screen as well. This information is included in this document that you can download. For some reason, you've accidentally closed out the download window. You can just go back to File up at the top left and go down to Transfer, and you'll be able to access this document again. So at this point, I wanted to say thank you to all the panelists and all the attendees for spending the last 90 minutes with us. I think it was a great conversation. I recognize we didn't get a chance to go through all of the questions that were asked, but we will try to follow up with you individually to provide you answers to those questions. I'll coordinate with the panelists to get the answers to you. We have been recording the session, and so we will work to make that available for you. So with that, again, thank you, and I offer a virtual round of thanks to all the panelists and to all the attendees. I hope that you enjoy the final day of ACEF and certainly stay safe, and we look forward to talking with you again soon. Thank you very much.
Thank you.
Thanks, Mark.
Thanks, everyone.
Thanks all.
Thank you.
Bye-bye, everyone. Thank you.